What's up, YouTubers? It's me, Johnny, again. I just want to make a short little video on why I think gold's going to continue to keep going up in value. Just to date this video, it's March 6th, 2016. Why I think gold will still go up, or why gold's still in a bull market. When you buy gold, you're basically betting against the government. And right now in 2016 in the United States and Western Europe, I think a good bet against the government will make you a lot of money, and if that's in a market, I think the gold market's a good place to be, and possibly silver if you have a more speculative approach to the markets. Right now in 2016 in March, the economy is still continuing to get weaker and weaker in the United States and the Western world in general, but especially in Western Europe. The only light in Western Europe right now is probably Eastern Europe. We can see from the flow of immigrants coming into Western Europe that the only place where they may not have success in integrating these recent immigrants into like Germany and Sweden and places like that, well, they don't seem to be invading Eastern Europe too much. So there's still hope for you if you're in Europe. You might want to head for Eastern Europe. If you're in Western Europe and you don't want to go to Eastern Europe, head out to the Americas. Anyways, this video is about gold, so I'll get back to the subject. The reason why I think gold is still in a bull market is because what happened in 2008, 2009 with the economic crash we had. What the government did was they inflated the money supply and created a lot of excess reserves that are parked at the Federal Reserve and parked at the EU bank. I'm not sure what they call their Federal Reserve Bank there in the EU, but basically it's the same. What that has created is huge, massive reserves in the EU bank and in the U.S. bank, or the Federal Reserve Bank. And what's happened is basically, at least in the U.S., the United States has stabilized their money supply, and I think that's why our stock markets have gone down gone down a little bit, and why gold went down from like 1900 to down to 1060, I think, for the low. I'm not sure if that's the low or not. And I think silver was like at 49 bucks an ounce, and now it's about 15. I'm not sure what the low was, 13 or 14, I think. And in the last month or so, we've seen negative interest rates starting to flow across Europe, and I think we quite possibly can see that in the U.S. So why will that be positive for gold? Well, I think mainly because chaos. This is unprecedented territory. All this inflation of the money supply hasn't helped the U.S. economy, hasn't helped the Western European economy. All over the Western world, including even Asia, the world economies are slowing down. Historically, the Keynesians have said, increase the money supply, increase the deficit, raise taxes, and you get a prosperous economy. And we're seeing that's just not so. It's 2016. More and more professionals are losing jobs compared to people in factories, but even the factories factory jobs are disappearing, going to the east. The factory jobs are declining because of robots and software, and it's the same with engineers and accountants. Software is replacing their jobs, and all this Keynesian planning, economic planning that the state's doing, has really not improved the economy of the Western world, much less the United States or Europe. And we're even seeing evidence of that in the slowdown of a lot of Asian countries. And I think we're about to see some major chaos in the Chinese markets. And because of that chaos and all those reserves parked in the bank, I think that's why we haven't seen massive inflation. Like I said, in the U.S., the money supply has been stabilized, so I think that's why we haven't really ultimately seen hyperinflation like some people have thought might happen. So what do I think is going to kick off the gold? Well, I think as the economy gets worse in Western Europe and the U.S., I think the Federal Reserve will reverse their stabilization policy of the money supply. So that will kick off gold and silver into much, much higher levels, and probably the oil too. Oil, natural gas, and other commodities. In the EU, they're still inflating the money supply, so I expect to see that money supply go back into gold. But here's why: not so much because of inflationary scares or worries, but because of chaos. There's really nowhere you can park your money and get a positive rate of return and have safety of your capital, not in the Western world anyways. in parts of Latin America and parts of Asia, you can still get a positive rate of return. And I think quite possibly in Canada and Australia, you probably can. But a lot of Western Europe and in the United States, interest rates are less than 1%. Most of the Western banking system doesn't even pay you a quarter of a percent. So I'm not sure how much longer banks can stay in coin with this negative interest rates and getting a quarter to half a percent on their government reserve or excess reserves. They're certainly not lending the money, so they're not making money there, and they have certain upkeep and costs and taxes they have to pay. And so for the average depositor, I think what you're going to see is more and more of the elite, the hedge funds, the wealthy the wealthy of the world will start parking more and more of their capital into gold. Not a huge amount, but a small percentage of their capital, like hedge funds, like family offices, like wealthy individuals. And that's what I think was going to put fire under the gold price. So we don't even have to see any kind of modest inflation or hyperinflation. Just more panic and chaos in the markets, I think, will push gold up. So I think, as Doug Casey likes to say, gold is a crisis hedge. So we'll see that reflected in the market in the years to come. Anyway, that's just what I think. What do you guys think? And leave a comment. Tell me what you think of what the future is for gold, and do gold bugs have any hope? Like, share, subscribe. Tell me what you think. Thanks.